Welcome to Polaris-Live, conversations on the US-China relationship and its global impact, as seen through the eyes of experts from around the world. This user-supported channel brought to you live in conjunction with the Foreign Policy Association of New York. Viewers may ask questions using the bar on the right-hand side of the screen. The U.S. presidential elections on November 5, 2024 are now being called the most important strategic signal for the future direction of U.S. domestic and foreign policy in generations. How are countries around the world preparing for the outcome of the American elections? Throughout this autumn, we will invite a select group of international opinion makers to offer their views to Polaris-Live's viewers. This is your host, Sarwar Kashmeri, and my guest today is Mr. Shehzad Qazi, the Managing Director of China Beige Book, one of the most authoritative publications on China's business and its economy. As the firm-wide operations lead, Shehzad oversees product innovation, client services, new business acquisitions, and corporate strategy at China Beige Book International. Welcome back to Polaris-Live, Mr. Qazi.
Good to be with you. Thank you for inviting me again.
So, Shehzad Qazi, U.S. business publications seem to be single-mindedly of the opinion that the Chinese economy is on its knees, in ER. Do you agree?
The Chinese economy is slowing down. It's certainly not in a full-blown crisis, which seems to be the opinion of a lot of Wall Street analysts now, who unfortunately year after year keep overshooting in their projections of how well the economy is going to do, only to be disappointed mid-year and at the end of the year.
That's very interesting. I mean, not long ago, you'll recall, these same folks were saying that China is the mother of all investment opportunities, right? So I mean, what makes this discrepancy, you think?
Yeah, I think the bigger problem that we're dealing with today is that the China economic story was massively, number one, oversold. So you've got the investment banks who have been wanting to sell their clients a interesting investment story, which was not grounded in facts or reality, but simply on hope. And that has proven to be very, very wrong. The other important part of that, as we've discussed before, is that a lot of the China watchers and China analysts have not taken account of the fact that the economic policy planning and management in China and the economic priorities of the Communist Party have changed drastically from a time where they used to look for double-digit GDP growth or high single-digit growth levels to today, where they're very comfortable with the idea that the economy is going to slow down. They've accepted it as an inevitability. What they're trying to do is engineer some kind of transformation, hoping to engineer a transformation that protects them from just getting into this economic malaise where they see no growth at all. They're hoping to have a consumption-focused or consumption-driven economy. It's a big and tall order for them. And I think most importantly of all, they're trying to strengthen China, and they've taken a national security perspective that says, the first thing we need to do is have a strong military and be at the cutting edge of advanced technology and advanced technology manufacturing and so forth in the world, so that the world is dependent on us rather than the other way around. And that's going to make them more powerful politically. So a lot of shifts have taken place, but all of these have gone completely missed or are overlooked regularly by a lot of the China watchers who want to just tell you that this year Chinese equity markets are going to outperform their global peers, or that the Chinese economy is going to do well because Beijing is going to step in with a big stimulus package and so forth. But as I said, these predictions have been disastrously wrong.
I was reminded of what you've just said when I was reading the Financial Times this morning, because they're quoting economists largely in the West who are saying that more than $2 trillion will need to be invested by China into its economy to get back to that rate of growth. I also find it interesting that many of China's central bankers are all U.S. trained, right? Shehzad? Many of them are, I should say. And isn't this what central bankers are taught to do in the West, especially in America? And why the second part of the question is, so how did the Chinese then diverge from this orthodoxy?
Yeah, I think a big shift has taken place in the economic management there. And I think the central figure whose role needs to be acknowledged is directly the president or party secretary, Xi Jinping.
Right.
Economic policy planning in China is, of course, today far more centered. Quite frankly, policy planning in general in China is centered very much within what Secretary Xi is looking to do, and those around him are are aligned with him in this thinking. So what I mean by that is he is not interested in rolling out big stimulus plans as they relate to the old format of building highways and roadways or doing big port developments within China. They see that the road has sort of run out on a lot of that. More importantly, they're not looking to do any type of mega housing rescue package. They have tried to slowly resuscitate the housing market, but the steps are somewhat modest in nature compared to what markets would like them to do. But they are not trying to reinflate the property bubble at all. So that's another big no. The area where they actually have done stimulus, which has gone, unfortunately, by and large unnoticed and again, not fully understood, is monetary policy. So there actually has been a very significant amount of monetary policy easing in China. If you look at corporate interest rates when it comes to the rates at which companies are able to borrow, they were far lower in 2023 than they were in 2022. They're lower today in 2024 than they were in 2023. And when you pull back and look at the picture overall, in the last 12 years, these are in China Beige Book's proprietary data. These are some of the cheapest rates at which loans can be obtained today. However, here's where the problem comes in. The overall economic slowdown and the soft consumer demand, the dull business environment means that companies do not have an incentive to go out there and borrow in large amounts. And so the monetary policy easing has essentially failed to stimulate the economy because companies are simply not borrowing. They're not investing, they're not hiring, they have no reason to. So the monetary policy levers that they could have pulled have essentially stopped working or stopped being effective. That's the stimulus picture. It's much more nuanced that should be understood, but you'll almost never hear this in any report or any commentary.
No, we don't. And I thank you for bringing that to the attention of our viewers, Mr. Qazi. So, you mentioned something, and I heard this from another commentator yesterday, European commentator, and they were saying that China's big objective rather, is to become the strongest power in the world. That's what they want to do. I'm not certain that I had heard that before. I mean, I'd heard that China wants to be the dominant power in its part of the world, in its backyard. I'd also read numerous places everyone talks about China's GDP, right? That it's, by some accounts, the CIA and others, it's already the largest in the world in PPP terms. But as you know, people don't live on GDP. They live on GDP per person. And in that respect, China is 1/4 of ours. And I always thought that Xi Jinping and the other thinkers in China want China over the next few years to become a middle income power, $8,000 to $10,000 or $12,000, $15,000 of GDP. So do you believe that that is still where they're headed in the short term as they approach the 100th anniversary of the Chinese Communist Party? Or do you think that they want to become the strongest power in the world?
So let me take a very important element off this, because strongest power in the world can mean different things to different people in the room. Let me take it from the economic angle. The strategic goal, as laid out, by the Communist Party itself several years ago, was that, look, we need to become the global leaders in advanced technology, whether it is things like electric vehicles, whether it's semiconductors, whether it's biotech, whether it's quantum computing, AI, so forth. Right? About 13 or so strategic sectors and technologies were listed where China had to, first of all, become ascendant, or become, I should say, first of all, become independent in terms of being able to produce this technology domestically, and then, of course, also acquire a position of global dominance. Made in China 2025, which we used to hear about all the time, was all about these ambitions. Now, there is the international aspect, of course, of these ambitions, is that China doesn't want to be, as I said, a country that is dependent on imports of high-end technology in order to climb up that ladder. Or quite frankly, even mid-tier technology, right? They want to have the technological supremacy to do so at home and then take an ever larger share of the global market. So if you look at electric vehicles, for example, I think it's a classic case of China being able to accomplish those goals. Today, the European market is overwhelmed by Chinese electric vehicles. If you go around to parts of Southeast Asia and Latin America, you see tons of electric vehicles. Chinese electric vehicles are quickly or rapidly overtaking market share there. And to the point where no other company is able to compete against them because of price. And of course, they've gotten there through many, many years of subsidies. It's not that Chinese car producers are just somehow magically better than their global peers. It's just that they have been heavily, heavily, heavily subsidized, which has allowed them to sell cars for as cheap as $8,000, $8,500, $9,000, which is unheard of anywhere else. If you look at solar panels, it's going to be the same thing. Today, the United States is heavily dependent on imports of solar panels, as are most other countries. On China, they've gotten there to the same thing. They're trying to do that increasingly with older generation semiconductors. And of course, the other technologies of the future that I mentioned are next on the list. So it's about becoming a dominant power globally through these factors, the economic factors that we're talking about, and not just sending their ships into the Atlantic Ocean or to the far reaches of the Pacific and saying we're going to determine maritime trade rules outside of the port of Los Angeles.
Well, let me, Shehzad, remind our viewers that Polaris-Live is entirely viewer-supported. We'd appreciate your signing up to our mailing list at kashmeri.com and to our YouTube channel, www.polaris-live.com. There's no cost, and it really does help us. One of the strengths of your company and the China Beige Book, as I understand it, is that you actually track hundreds of companies in China on a regular basis. Is that what makes your forecast so accurate? And also, tell us how you're able to access this data. Why would the Chinese let you have this deep access?
Yeah. So, as you correctly said, we survey thousands of Chinese companies every month, around about 20,000, just about 20,000 unique companies go through the China Beige Book Economics Survey every year. And one of the most distinctive things about China Beige Book is that unlike most China watchers, we don't spend any time trying to put out GDP forecasts or PPI forecasts or inflation forecasts on China. We've always considered that to be, quite frankly, a waste of time, and it doesn't really tell you much about how the economy is performing on the ground. In China, the economic targets are political targets, and if they are set out at the beginning of the year, they will be hit by the end of the year. So you shouldn't, quite frankly, be spending much of your time worrying about numbers. You should be spending far more of your time actually understanding economic activity on the ground, which tends to diverge in very important ways from just the top line growth figures. The thing about China Beige Book is that we are a private company that was created to make Western investors and Western companies smarter on their China investment writ large. And I think that's, that remains our objective. But I think the beauty of what we do is that we don't have a position one way or another. We are not bears. We're not bulls. We're not putting out a forecast and then we need to align ourselves with and bend every piece of data available to make it fit. There's no political ambition here. We're simply here to tell you this is what economic performance of these thousands of companies look like this month, this quarter, and this year. And I think the fact that we don't have this bias one way or another has gone a long way on earning us respect inside China. Quite frankly, we're able to do what many folks, maybe even within the NBS or so forth, wish they were able to do.
And that's an important point that you make that I think even I tend to forget a lot of times, is that unlike what the US does, which is actually calculate the GDP as the year rolls along, the Chinese actually set a GDP target. And as you've pointed out, they will meet it or heads will roll, kind of. That's a big difference, isn't it? That is of setting it versus calculating it on an ongoing basis.
Yeah, that's absolutely a big difference. And look, let's keep in mind that government statistics are imperfect as any other statistic can be, and is by definition when it comes to how you practically collect these data. The important thing to keep in mind on the Chinese example is that lots of alterations, changes, and quite frankly, straight up manipulation of the official numbers takes place on a regular basis in order to hit the target. So the downside of the setting a target and then hitting it no matter what is that a lot of fancy mathematics has to be oftentimes done in order to make it appear that you are hitting the target. But if you get caught up in just the number, well, you are going to be losing a lot of money over the long run, because on paper you can make it seem that X billions or trillions of yuan worth of items were purchased. But if households are not actually purchasing it, shops are not going to be actually selling them. And if you're betting on consumption, or you're betting on any type of economic activity, well, the numbers will ultimately show up on your own balance sheet, even if they don't show up in the government's official ledger.
How do you think, Shehzad, that China is strategizing to cope with the results of this November's elections in the US? Especially the $1 trillion of US treasuries held in China? What might they be thinking about?
Well, the first thing that they're doing, and there has been a lot of talk of Chinese oversupply lately. One of the things that has happened in China over the last couple of years, through COVID, of course, it was a manufacturing-led recovery that you saw in China. But over the last year and a half, or 2 years, I should say, Beijing has really doubled down on its manufacturing sector as the economic to drive economic growth, because property is in trouble, consumption is relatively dull and relatively weak. So what they're doing is they're saying produce as much steel as possible, produce as much copper as possible, produce as many cars as possible, and sell them abroad at incredibly cheap prices. Don't worry about your profitability; you'll be taken care of at a later date. So there's this global flooding of Chinese products that we're getting. And before the elections, one of the tricks, by the way, is to just double down on that, because there's such a fear that there might be more tariffs, and there will be more tariffs on Chinese products in the future. That one of the ways to cope with it is to say, okay, sell the products and sell as much as you can today, because you don't know what's going to be coming down the pipeline. Now that's one element of the Chinese oversupply problem as it's being featured right now. And we're already seeing, by the way, trade actions against China through a variety of different countries taking place, including ostensible allies and large trading partners like Pakistan or India, respectively. The other thing, of course, is how do you game out what's going to happen? And I think from the Chinese perspective, they expect, by comparison, less trade action right away, and slower moving process towards trade actions. If they get a Harris administration, I think they think it'll give them a lot more time to adjust to what the policy changes are, because it's going to be closer to what the Biden folks were doing. But if there's a Trump administration, they are going to be in for a real ride, because like anybody else, there's going to be far more uncertainty ahead for them.
Dartmouth College's China historian Pamela Crossley Shehzad told us last week that trade has always been the center of gravity of China's foreign relations, going back to the Qing dynasty. And that's the lens through which they view relations with other countries. First of all, do you agree? And second of all, do America's lawmakers understand that as they're thinking of more and more tariffs on China?
Yeah, I mean, I think I think trade certainly has been a dominant way with which the West has certainly viewed China, right, over the centuries. I think Chinese policymakers, of course, see their role in the world as broader than that. I think the trade over since China's entry into the World Trade Organization and the coming down of barriers and trade barriers and tariffs and so forth, allowed China to rapidly grow, and it did just grow as an economy and become this massive economic power, but it has simultaneously become a very, very strong military power. Today, we see China asserting itself in the South China Sea, of course, in the Pacific, in the Indian Ocean, and so they have certain very, very certain military ambitions which go alongside just the trade component. So I think we can't simplify the fact that they see it as some kind of business, from a business mindset alone. As a matter of fact, as I said at the top of the hour here, it is the national security lens and the military superiority that they seek, which is by and large driving the economic decisions that they are making today. Policymakers in Washington, or rather lawmakers in Washington, I think have correctly understood that the Chinese perspective towards trade is very different from the American perspective. The American perspective is if our businesses go out there and make money, that's a good thing for us. It's a good thing for our consumers. In China, of course, the trade perspective, the business perspective is again seen from the lens of becoming politically powerful, becoming militarily dominant, and having those ambitions and the military and political ambitions that you put into place, whether it be the taking back of Taiwan, whether it be creating a bunch of islands in the middle of the South China Sea and so forth, and claiming larger and larger territorial, claiming more and more territory for yourself. So I think they are increasingly trying to grasp what the Chinese perspective and the Chinese approach towards trade has been. I'm not sure they've fully gotten it. And of course, we're still a long way from coming up with the right solutions that are needed in order to protect American national security interests, because a lot of the opening to China, was basically the end result was that a lot of American national security interests were very severely undermined, and it created lots of problems domestically at home that we've discussed previously.
This is a subjective question, but do you think China's experts understand America's economy better than America's experts understand China's economy?
I don't doubt that for a second. I think there's such a large number of Chinese students that have come through over the years, which have included, of course, many members of the Communist Party today who've lived here, who've spent a lot of time here, who've traveled through the country and have an expertise on the language that they have had far more, I think, exposure and understood the American system. As a matter of fact, let's not forget that a lot of the theorists of the Communist Party today, who have, whose theories include that the West is in decline and specifically America is in decline, have spent time here. And they've seen what has happened to the U.S. internally with the decline of American infrastructure, with the erosion of economic power inside America, the rise of deaths of despair, as they say, and the drug crisis, et cetera, et cetera, et cetera, that has led them to say, look, they are a declining power, they're going down, and we're the ascendant power, we're going up, we're going to be in charge, at some point very soon.
Right, and I would suspect some of that has to do with language proficiency, doesn't it, Shehzad, in that this generation of American officials who deal with China seem to be speaking a lot more Chinese, but most of the people in charge speak English fluently. You think that's also a reason for this?
Well, I think that made it easier. So the language proficiency made it easier to come here and study here and live here. And I think and understand the culture, and that's kind of how this has happened. And we have to keep in mind, open societies, by their very definition, are open. They allow therefore folks to come in and see how things happen. China is a very closed society; it's a very different environment. So the number of students who want to go to China is going to be small. The number of students who are going to be able to go around and freely roam around and see everything they want in China is probably going to be a lot smaller than ultimately the number of Chinese, or at least has been thus far. So these are very intricate little cultural factors that play a big part in when we think about geostrategic and geopolitical planning as it takes place in the centers of power.
And so I'm going to ask you a technical question and see if there's a way to simplify it. We hear a lot about this overcapacity scenario. That and everyone seems to point out that China's got to change it because this is otherwise going to lead to more tariffs. Is there a way to very simply explain overcapacity? And I still don't understand why this is necessarily bad. So I'm going to pop that to you, Shehzad.
Yeah, so overcapacity very simply means that in China, they produce more material, more things than they need domestically. And what they do is they bring the prices down massively, and then they sell it abroad cheaply, right? So this is called dumping, right? So and this is of course in violation of WTO rules and regulations. So as I mentioned earlier, they produce way more steel than they could use domestically. Then they have a ton of steel that's sitting in inventory in warehouses. What do you do with it? Well, you bring down the prices massively and you start selling them to folks and to companies and users in other countries. You do the same thing with copper. It's the same thing that's done with EVs. Now, the key thing to keep in mind is this is done because the state steps in and supports the company. So if you're reducing your prices and selling them at a loss, well, the state is coming in and giving you subsidies, whether it's that your power is free, your electricity usage is free, or you're getting no interest or low interest loans, or you're not paying rent for the buildings you're occupying, or you're getting subsidized for the workers that you're hiring, whatever it may be. So overcapacity, very simply, is so that's what it is. By the way, this is a long-running problem that the Chinese economy has. From a global perspective, that they produce things at unnaturally low rates because the state steps in and provide subsidies, and then they dump it abroad. There's another element of this, which is not just the fact that it puts businesses out of, or puts companies out of business in other countries, which of course cannot compete with Chinese companies because they're not getting the same type of subsidy support from their own countries. There's a domestic element to this. As long as China and Chinese policymakers are going to continue focusing on providing financial support to their industrial sector, they're doing this ultimately at the expense of their household sector. They're not providing support to their household sector. Therefore, the household sector is not empowered. They cannot consume. They have less. Essentially, money to it and resources to be able to consume services and goods and so forth. So if you think about the economic transition that they want to engineer, where they don't want to be dependent on the industrial sector, they want to be dependent on consumption. They are going to have to, at some point, choose to make that switch over and instead provide the right type of financial support to the household sector and away from the industrial sector. So that's kind of the lens with which to understand this.
Okay. And I'm going to ask you a final question. We're running out of time. But I had to ask this in view of the presidential debate tonight. What is the one thing that you hope gets clarified for you tonight?
Well, it would be excellent to hear both sides, lay out what are some of the biggest China-related policies that they plan to have in their administration. And even if they can't get to the top line of the policies, what are their goals? I think that would be, as a matter of fact, even better. Here are 3 things that we need to accomplish vis-a-vis China, says Mr. Trump or President Trump, and same thing through Vice President Harris. That said, I don't think we're going to be getting a lot of clarity on China policy tonight.
Well, Mr. Qazi, we've run out of time. Thank you so much again for that timely and instructive conversation. Thank you for coming back to Polaris Live. I hope you'll come back and see us again. And let me thank our viewers from around the world. Please join us again on polarislive.com as we continue to explore the impact of the U.S. presidential elections on the most consequential relationship in the world, that between the United States and China, and its impact on the world. Until then, goodbye.